Hi, this is Jeremy from Ross Automated Solutions. This is a quick demo of SEC-FSN plus structural, a structural feature layer for financial statement analysis. Most financial analysis stops at ratios, revenue growth, margins, ROE. Those are useful, but they do not always tell you how reliable or persistent a company's performance is. I built this project on top of SEC-derived financial data to focus on three things: earnings, quality, stability, and consistency over time. Instead of only asking, what are the numbers today? The goal is to understand how those numbers behave across periods, whether earnings are cash backed, whether profitability is volatile, and whether the financial relationships look structurally coherent. This repo is part of a broader financial data pipeline. SEC-FSN handles the raw data ingestion and normalization. SEC-FSN Plus builds fundamental ratios and factor style features. SEC-FSN Plus Structural adds a structural signal and scoring layer. Each layer builds on the previous one, moving from raw data to standardized features to interpretable structural insights. The repo includes earlier notebooks that walk through the synthetic demo, feature diagnostics, company level analysis, and structural feature map. Those are useful for understanding and validating the system, but I'm going to skip them for this short demo. Instead, I'm going to focus on just notebooks 5 and 6 because they show the real data workflow and the final scoring layer. Notebook 5 is the real data example. It loads clean fundamentals, derives the base ratios, and then builds the structural feature set. This is where the project moves from a synthetic demo into real SEC-derived fundamental workflow. Here you can see the pipeline adding new structural columns, including accrual-based signals, cash versus earning measures, and stability-oriented metrics. Notebook 6 is the main validation notebook. It runs the structural feature pipeline end to end and creates a scoring layer. The main scoring components are quality, stability, and consistency, which are then combined into a composite structural score. That score is designed for cross-sectional comparison between company period on observations. This chart shows the distribution of the main scoring components. At a high level, the higher structural scores support stronger cash support, more stable profitability, and more consistent financial behavior. Lower scores may point to weaker cash support, higher volatility, and less structural quality. The next output compares top and bottom companies in the latest period by structural score. This is where the project becomes practical. Two companies can look similar on a snapshot basis but behave very differently over time. This scoring layer helps surface those differences in a systemic and scalable way. The output can plug into screening, research workflows, dashboards, or downstream models. So that is SEC-FSN plus structural. A link to the GitHub will be provided below. Thank you.